corn market is hanging on to just about a half to 3/4, and in some cases 1 penny gain here as we get close to mid-session trade here on this Tuesday. Right now, the December corn contract is up 1, and that just changed. Now it's up 3/4, 385.5. The March is up a half at 395. The soybean market, though, a couple of those front month contracts started to lead the way lower. And now it's November down 1 3/4. January down 1.5. But in the wheat market, Chicago wheat has been trying to kind of follow the lead of what corn has been doing. And the wheat market just up by about a penny in most of those front months. You go out to the far out deferreds, the gain is a little bit less than that. It's only about 1/4 to a half a penny higher. Let's say hello to Brian Oops. He joins us now with Midwest Marketing Solutions in Springfield, Missouri. First of all, your thoughts here on this trade here today and how it fits into what we saw as far as harvest progress, Brian.
Yeah, good morning, John. Always good to talk with you. You know, we're seeing a little bit of delay, especially in that western corn belt, North Dakota, South Dakota, Wisconsin, Iowa, Minnesota, all well behind the normal pace. And that is a supportive feature to the corn market. It's going to be supportive as well for soybeans. There are a lot of harvest way behind normal left to do yet. And it's a feature that the trade is having a tough time ignoring, and it's providing support to our markets. And another supportive feature is the spreads between, say, December and July in the corn market. We're starting to take out some of that carry that's in the market, and that's usually a pretty friendly indication that prices are going to stage another rally. And we think we will see some strength as we go into early part of November. We start talking about the supply and demand report out on the 8th and possibility of a yield cut in both corn and soybeans. That could give us another rally that producers, I think, really need to take advantage of.
And Brian, don't get me wrong. I'm not trying to talk the market down or anything, but we do have to be realistic. Look at the deficit that we're running as far as our corn export numbers. You mentioned the supply and demand report. That's got to be taken into consideration, doesn't it?
Yeah, that's one thing that we talk about is why we're going to have limited upside potential here for corn and for soybeans. So if you get these rallies, like we talked about, maybe one into November, that's when you have to take advantage of and can't get real complacent in this marketplace, because right now the only bullish factor we have for corn is possibility of reduced yields, and I don't think there's a disaster out there, and I don't think we're going to see a big improvement in our export demand or ethanol demand, for that matter, here in the near term. So that leaves us with trying to see rallies off of some lower production figures be sold. And quite frankly, if we have a larger production figure at any time in the next several months, it's going to be very bearish for prices, because that takes away our only real bullish catalyst.
All excellent points, Brian. We'll be back in just a moment and get Brian's thoughts on the livestock. Stay with us. We'll have more in just a moment here on the Market Day Report. Well, the live cattle market just kind of drifting around here, Brian. Today we've got these front months just hovering around that unchanged level. Is there much news to get us off a top dead center yet?
Oh, not really. The show list numbers that have come out are about 263,000 head for this week's numbers. That's up from last week by 5,000 to 7,000 head, so not a major change. It is considerably larger than last year by about 40,000. But, I think the Packers have enough margin that they're working with. They're going to continue to try and push these cattle through their kill facilities and take advantage of the profitable margins that they're dealing with. So we don't expect to see a large drop in the cash markets. You are looking at end of the trading month on Thursday, so you could see some volatility on that day. There's a tendency for some of these long traders, particularly the funds, to bank profits near the end of the month, and that could produce a pretty healthy setback. But again, there's probably some buying interest. If we see that type of a pullback, we'll see a lot of buying interest step into the market.
And feeder cattle markets do a little bit of backing up here today as well, although the losses only in that 20 to 40 cent range so far.
Yeah, not much of really any significance there in the feeder cattle market, kind of an inside trading session. Sometimes that does tell us that while the market's consolidating, it could have a pullback. And again, that may be an indication that we have this pullback coming in the next couple of days at the end of the month before prices then, try and resume an upward trek in the early part of November.
Okay, well, now the hogs. Here we are losing about $1 to $1.50. Right now, the December hogs down 135 at 64.30. The February down that 135 also at 72.63. To go out to far out to Ferds, we're not quite losing as much here, but it certainly seems like those front months are quite a bit weaker.
Yeah, they certainly are. We're taking some of those premiums out of those front month hogs. We're adding weights each week. Our weekly supplies are increasing, and this is a time where we don't have a lot of product being shipped out. We have plenty of supply right now, and so we're taking some premium out of those front months. The front 2 months will likely come down, and if we don't get an agreement reached, we're going to see more premium being taken out of some of those summer contracts as well. You look at June hogs, over $90 already. There's a big spread between this year's December hogs and next year's June hogs, with only 6 months time difference. So the market's really anticipating we're going to see a lot of export business.
You mentioned the weights here just a little bit. How is that affecting the cash at all?
Yeah, the cash market kind of remains a little subdued. You know, this is a kind of a weak time of the year anyway for cash markets, and with those increased slaughter numbers, it keeps the lid on the cash rallies.
Brian, always a great visit with you. Brian Hoops is with Midwest Market Solutions. He's the president. He's based in Springfield, Missouri, where they're kind of getting ready for that cold blast too.
Yes, they are.
Okay.
All right. Thanks, John.